That is the closing bell on Wall Street, and now it's market domination overtime. We're giving you the full team coverage of all the moves to get you up to speed on the action from today's trade. Paul LaMonica, as well as Yahoo Finance's Ali Canal, joins us here to break down the moves in today's trade. Ali, let's start with you on that close.
Well, Josh, we had a lot of news today when it comes to trade and comments from President Trump. But in terms of some market action, a pretty boring day on Wall Street. We had the Dow ending the session down around 0.4%, or roughly 165 points. The Nasdaq and the S&P pretty much didn't do anything. We had the Nasdaq closing just above the flat line, the S&P closing just below the flat line. The big action here was in the commodity space, particularly when we look at copper prices. Now, this comes after President Trump. He said that 50% tariffs on imports of copper that's going to be hitting soon. We don't exactly know when that will come into play, but he could have the authority to do it pretty much immediately. Now, this joins the 50% tariffs that we have on steel and aluminum. You'll see we finished up around 9% on the trading day. We were up well over 100%, giving up a little bit of those gains there. If we take a look at some sector action, you're going to see energy, materials, tech leading the way to the upside. You have utilities, financials, consumer staples trading in the red. So pretty much split between red and green. And then if we look under the hood of the NASDAQ 100, interesting to see Amazon closing the day down around 2%. Now this comes on the heels of the start of Prime Day, or I should say Prime Week. We did get data that showed sales on day one of Prime Day lagged expectations a bit. So we'll see if we can make that up through the rest of the week. But compared to some of these other Mag 7 players, Amazon has really struggled since the start of the year. You have Nvidia up around 1%. And I want to take a look at market cap here because we are chugging closer and closer to that 4 trillion market cap for Nvidia. Some analysts on Wall Street say that this stock has the potential to hit a 6 trillion market cap, but we'll see. One thing at a time. We are just around 3.9 trillion there, Josh.
All right, and Paul, I'm going to get your thoughts on today's trade as well, because Trump today was making headlines on tariffs, Paul, again, as usual. Now, there's some folks, Paul, who say, listen, and I've had portfolio managers with us on the show this week, they say you have to look at the headlines, and you should register the headlines. You should respect them, Paul, but then you should just move on with your life. And their point was, Paul, this is just the Trump tactic. This is the art of the deal playing out. What do you make of that?
Yeah, I mean, you would have thought we would have learned our lesson collectively from the first administration, but I think you're right that, yes, there are going to be sometimes incendiary type headlines that in theory should make people nervous, but at the end of the day, it does seem like everything is out there as a negotiating ploy. It's maybe not for show, but it is clearly suggesting that nothing is set in stone. Even though it may sound like it is, there is that certain aura of wanting to sound really tough so that you have the upper hand in negotiations. And that's obviously something he did in his business career. He's doing it in his political career as well.
Taking it right to the White House as well. Yeah. All right. Well, the tech industry, meanwhile, once again on edge after President Trump signed an executive action delaying the implementation of his reciprocal tariffs until August 1st. For more, we're going to bring in now Jason Oxman, CEO and president of the Information Technology Industry Council. And we have Yahoo Finance's very own tech editor, Dan Halley. Welcome to you both. Jason, maybe to start, for the unaware, for the uninitiated, can you just walk us through what you all do there? Because you do represent some big tech companies people are very familiar with.
Yeah, ITI is the trade association of the global tech industry. We are proud to represent 80 of the world's largest tech companies across what I like to think of as the omnibus of the tech association world: semiconductors, software, hardware, components, service providers, network operators. So really the end-to-end of the global tech industry is what we do at ITI, and we work very tirelessly to make sure that the innovation economy here in the US and around the world is powered by the tech industry. And these public policy issues that we're talking about, tariffs, trade, taxes, and the like, have a big impact on the ability of the tech industry to do what it does.
And let's talk about those tariffs, Jason. As we mentioned there, Trump making some news right this week, did delay the implementation of those reciprocal tariffs. What does that mean for the tech industry?
Well, it's a period of confusion, I think is the best way to say it. And we're looking for the Trump administration to be successful in negotiating trade deals. That's what seems to be behind these latest tariff moves. The Trump administration looking to move very quickly and strike some great trade deals with some allies, and the tech industry obviously supports that. 95% of the people that live on the planet live outside the United States. So for U.S. tech companies to reach those markets, it's incredibly important, and trade deals are a big part of that. The challenge, of course, is in order to spark investment in the United States, we need some marketplace certainty, and the tariffs create a lot of uncertainty. So moving quickly from a time period where we're using tariffs as a negotiating tool, as the Trump administration has framed it, to a time period where we enter into those trade deals. We don't need 200 of them, but if you look at the top 18 markets, that represents about 90% of U.S. trade with foreign countries. We can move very quickly to that, and I think it creates some certainty, and it will help investment in the U.S. as well as opportunities for U.S. companies overseas.
And Dan, I want to bring you in here as well, because as Jason points out, it does introduce some uncertainty for the tech industry, and the American tech CEO has to navigate that.
Oh yeah, it's not just CEOs, it's CTOs as well. And one of the things that I was hearing from some of the experts that I spoke to was, nobody knows how to proceed at this point. It's kind of, Gene Munster at Deepwater Asset Management said it's really like 2 steps forward and 1 step back. We're kind of now at this point almost where we were in April, where nobody knows if these tariffs are actually going to take effect or if they're not. President Trump, during his Oval Office meeting today, said, no, August 1st is now the drop dead point. That's when everything's going to go into effect. But according to Wall Street's reaction, it doesn't seem as though they believe that. Some of the folks I spoke to said they're just banking. This is Wall Street kind of banking on the taco trade. Trump always chickens out, and that he would back off on that and change the date. But others say, look, this is making it difficult for a number of industries in tech to move forward, whether that's data center providers or companies that are building out data centers. Okay, do we start buying now? Do we wait? Do we see if tariffs do actually come and then spend when we want to, or do we speed up the spending? Will there be pull forward in consumer side? Right, there was reports that we had seen some pull forward in the PC space. Malaysia, an area where Trump sent a letter, obviously, but also where some PCs are built, so that could impact them. Although there's plenty of other places where PCs are built. But I think the big part that a lot of people want to talk about is Apple and Nvidia, obviously, and for them it's Taiwan and it's China. And according to the ITC, I reached out to them and they said, look, what was negotiated, or those talks with China are separate from this. So what they had come to on May 12th, saying we're going to ratchet things down a bit, let cooler heads prevail, that's still in place. This doesn't impact China, although the deals that Trump is trying to make, where he says, look, we don't want essentially China as part of your supply chain, that could change that math.
Jason, when you're talking to your members right now, these tech CEOs, how are they thinking about navigating the uncertainty you're flagging here? I mean, are a lot of them saying, listen, I'm going to sit on my hands when it comes to investing, hiring, and spending until I get some more clarity?
I think you've actually seen the tech industry make some pretty significant announcements in recent months in response to the Trump administration's request that the industry invest in America. Over $1 trillion worth of deals announced, including, as Dan noted, a number of data centers that are being built, looking to lead the world in AI. Last week was a really good week for the tech industry after the big, beautiful bill was passed, because it reinstated a lot of research and development tax incentives that industry needs in order to invest in America. So that was a great deal last week. This week, we're looking at a little bit more uncertainty. And the challenge, of course, from this tariff policy is, in order to invest in manufacturing in America, we make a lot of things here, but we also don't make a lot of things here. And even to manufacture here, you need to access global supply chains. And those global supply chains just get more expensive, ironically, for manufacturing in America with this tariff policy. So we do need a little bit more certainty there. And again, if the Trump administration is moving, as they seem to be, towards striking deals, we've heard some good news today about progress with the EU, which is one of our largest trading partners, progress with other countries like India, which are large trading partners as well. If those things move forward, I think that provides the certainty we need. But the tech industry, as you noted, has made a very serious commitment to investing in manufacturing in America, and we want to continue to do that. A little bit more certainty would be helpful.
Let me end here, Jason, just quickly your thoughts on China. Because big picture, China wants to be a tech powerhouse. The U.S. government would prefer they not be a powerhouse. And so we impose, for example, export controls. I'm curious to get your take on that as a policy tool.
It's a really existential question because China is our largest global competitor, both economically and as a matter of national security as well. And what we need to see is countries around the world that are not China turn toward us. And that's why these trade deals are so important, because if the U.S. is a reliable trading partner, countries are more likely to trade with us rather than China. China is making inroads around the world, and they're sending a message to countries that maybe they should be a reliable trading partner instead of the United States. That's not where we want to end up. We want to attract the best and the brightest from around the world to come here and start the next great technology company. We want to make sure we do that. China's trying to do that as well. We also need to reflect the fact that there are a lot of people who live in China. It's a country of 1.4 billion people who like to buy a lot of things, and a lot of things are made in China, and that's okay too. So as long as we can look out for U.S. interests by making sure we don't erect a wall in front of China, but that we are economically competitive with China by striking trade deals in a smart way, I think we can make a lot of movement forward and reach our goals of dominating, particularly around important areas like AI.
Jason, Dan, thank you both for your time today. Appreciate it.
Thank you.
Well, coming up, U.S. home delistings surging nearly 50%. That's as the housing affordability crunch continues. Stick around. Much more market domination over time. That's coming up. Stablecoin issuer Circle getting a bearish call on Wall Street. Mizuho Securities initiating coverage on that name with an underperform rating. Yahoo Finance's Nez H joins us now with more. Nez.
Yeah, Josh. And Mizuho saying that, yes, an underperform rating with an $85 price target. And they are with this thesis because of these reasons. They're basically saying, look, the consensus for revenue for this company, for Circle, the issuer of stablecoins, is $4.5 billion in 2027 versus $1.7 billion in 2024. And they're saying the only way to really get there is if you have a significant increase in USDC, that's their stablecoin, in that circulation of USDC, or if interest rates stay high. So therefore, these analysts are saying that they see about 25 to 30% less revenue than the consensus. And remember that Circle makes most of its revenue from interest on reserves, and those are held in treasuries or in cash. And if the Federal Reserve, as expected, is going to be lowering rates, then the interest income for this company will be lower. They're also taking a look at distribution costs and saying that these are high. This is because of partnerships that they have, for example, with Coinbase, where they pay Coinbase part of their income. So therefore, these distribution costs are going to impact their bottom line. And then also the growing competition, because they're saying that the Genius Act that was passed recently in the Senate is going to spur more competition in this space. Now, the street is really mixed when it comes to Circle, because Circle has right now 8 buy ratings, it has 6 hold ratings, and it has 3 sell ratings. Some of the bullish commentary that's out there from recently, you have Seaport Global calling Circle a crypto disruptor. You've got Bernstein that also has a buy rating on this stock with a $230 price target, basically seeing a large TAM, total addressable market, for stable coins. And then you've got, for example, more of a Compass Point, which their analysts are calling a neutral rating on this stock, talking about competition and interest rates. So a mixed picture when it comes to the ratings for this company. But I will say that Circle has certainly completely outperformed over the last months. Remember that this stock, they went public at $31 a share. Take a look, it's at $204 since going public on June 5th, Josh.
Thank you, Nez. And Paul, I want to get your thoughts on Circle as well. We should note that the Mizuho analyst here, Dan Dolev, smart guy, and this was his initiation, where he initiates with the equivalent of a sell. And here's the money line. He says, we believe consensus does not fully account for looming interest rate cuts, and also, he says, overstates USDC's medium-term growth potential. What do you make of that, Paul?
Yeah, I mean, I think those are both great points. We know that the Fed is being pushed to cut interest rates by the president, and that aside, I think the economic conditions right now probably warrant a rate cut in September and maybe another one later this year if we see job growth start to decelerate. But there is that other issue of competition. There's Tether with USDT, which has the majority market share in the stablecoin market. And I think there are legitimate worries that even though Circle is the clear number 2 right now with USDC, how long will they be able to keep that market dominant position if the Genius Act does spur more innovation in the US, which wouldn't be the worst thing in the world to have more than 2 major stablecoins out there.
And by the way, Dole sets his target here at 85. Stock's around 205 right now. All right, meanwhile, AI stocks, they've seen meme-like moves. The traders trying not to stay in the game of the AI trade. Paul, your thoughts on the AI stocks recently, the moves we're seeing?
Yeah, it's been astounding to see what SoundHound and Big Bear, what some of those stocks have done. And it does make me nervous because it does.
Why does it make you nervous, Paul?
It makes me nervous because I do have some gray in my beard. I remember
you and me both. Yeah.
I remember the .com boom, and I do remember that there were plenty of companies that it was very fashionable to slap a .com suffix at the end of your name, and then your stock was off to the races.
You got to have an AI story, right?
You do, come on. Yeah. And not to say that SoundHound and Big Bear don't have the AI story, but I think that investors are chasing momentum right now, and you do have.
Well, that for sure. I mean, off that April low, that's been right. Buy the winners because you anticipate they're going to stay to be the winners for sure. Yeah.
Yeah, and I don't think that winners right now in this still very nascent business are necessarily going to be the winners of 2030, 2035, depending on what AI looks like 5-10 years from now.
It is interesting, Paul, because listen, investors have been so excited about that AI theme and trying to game out what it means for margins long term, and you have this group of big companies, right, that have now poured in hundreds of billions of dollars into this theme, and you kind of wonder how it plays out. I mean, is the theme going to be big enough to support all of them as winners, or do you think it shakes out? There'll be some winners and some are going to fall by the wayside.
Yeah, I think it will shake out in the same way that we saw with online retail in the late 90s, with online search. I mean, there's one Amazon, there's one Google. I do think that inevitably, it may not be that there's only one dominant AI company, but it's probably not going to be 20 or 30 of them.
Is a job for the investor there, Paul. There, you have to do your homework and you try to separate, okay, what's between what's real and what's marketing fluff? Is that your role?
Yeah, I think that's a big part of it. And I think you also have to have faith in the fact that the companies that are the mega caps in tech that are dominating right now, if you own either an Nvidia or a Microsoft or a Meta individually or through the numerous ETFs that are out there that track the SPY, S&P, track the Qs, you're going to get exposure to the growth of that industry. It may not be as eye-popping as the pure play AI stocks that might go from 5 to 50, but there are plenty that may go from 5 to 1 or less than that.
What do you make final value? You'll hear these big tech companies, and we're gonna hear from them all in this earnings season once again. And to the extent they keep saying, Paul, we're gonna spend on AI. We're gonna keep spending billions and billions of dollars. There are some who say, well, that's good enough reason, and then I just stick with Nvidia. That's all I need to hear. Is that too simplistic?
It's not too simplistic, but I do think that eventually there's going to be more competition for Nvidia. Whether or not Intel gets its act straight, that's maybe a big
Lisa
question.
Su's company.
But Lisa Su and AMD, clearly major competitors. You can't count out Advanced Micro Devices, and there are plenty of other chip companies. You got to look at Broadcom as well, Qualcomm potentially making some more inroads. It's Nvidia's game to lose, and they may not lose it, but they may not stay this dominant forever.
Good point. Thank you, Paul. Meanwhile, Realtor.com out with some new data. U.S. home delistings surging nearly 50% as the housing affordability crunch continues. And joining us for more is Yahoo Finance senior housing reporter Claire Boston. Claire.
Hi, Josh. So what we are seeing right now is just an absolute standstill between buyers and sellers. Right now, buyers are really, really stretched in terms of affordability. And sellers, they still kind of think it's 2021. They think in this market today that they are going to be able to get absolutely top dollar. But we are seeing more inventory come to market. And as a result, buyers have more to choose from. And sellers, they have a lot of equity in their homes. If they don't have to move, a lot of them are opting to just delist now instead of, maybe taking a lower price. And they want to wait for that really, really big number.
And I know, Claire, you're doing some more reporting, homes falling out of contract. What can you tell us about that?
Yeah, so I think when we're looking at out of contract, so that's a situation where you go pending and then something doesn't work out, it's a very similar situation. Buyers and sellers often can't meet on things like repairs. And sometimes the buyer will just say, okay, we're going to walk away now because they have other things to choose from. We're also seeing issues with getting insurance. We've talked a lot about insurance being an issue right now, causing home sales to fall through. That is probably not going to change anytime soon, and that can really stall a deal.
All right, thank you, Claire. Appreciate it. Time now for What to Watch Wednesday, July 9th. We're going to start off on the trade front. President Trump is pushing back his original trade deal deadline from July 9th to August 1st, giving countries more time to come to an agreement with the U.S. Trump unveiling a wave of letters threatening key trading partners with new tariff rates. Wall Street will be watching closely in the coming days for any new announcements from the Trump administration about deals that have yet to be reached. And taking a look at the Federal Reserve, the Fed releasing its minutes from the Nez FOMC meeting on Wednesday. Central bank holding interest rates steady, remember, at that meeting. The minutes providing more insight into where each Fed official stands on the interest rate path. And finally, Samsung hosting its flagship Galaxy Unpacked event on Wednesday. Investors will be listening closely for any commentary on Samsung's next generation of foldable phones. Yahoo Finance will have coverage from the event in Brooklyn, New York. Well, that'll do it for today's Market Domination Overtime. A big thank you to Paul LaMonica for hanging with me this afternoon. Paul, any closing thoughts for the audience?
I mean, we're getting ready for earnings season. It is right around the corner with a lot of the big banks reporting next week. That will lead to a lot more headlines about corporate news and not just the headlines that we're getting out of Washington on trade and tariffs. And that, at the end of the day, is what's going to drive this market potentially higher. If companies are able to shrug off all of these macro concerns, I'm very curious to hear what the big banks have to say, and then we'll start to have some companies in other sectors, tech, healthcare, coming in the coming weeks after that. So that's really going to be, I think, a major highlight to focus more on corporate America and just a little bit less on Washington.
Paul, it was great having you today. Thanks for
so
joining
much,
me.
Josh.
Appreciate
Happy
it.
to be here.
All right, don't go anywhere. On the other side of the break, it's Ask for a Trend. We've got you covered for the next half hour with the latest and greatest market moving stories so you can get ahead of the themes affecting your money. Stay tuned.